Hi, everybody. Welcome to the Impact at Scale podcast with Zal Dastur. My guest today is Michael Gryseels, who's the founder of Antares Ventures. So, Antares is a deep tech investment fund that's built on research and data driven conviction. Before launching the fund, Michael was a private investor and a managing partner at McKinsey. And now he's focused full time on backing breakthrough science and technology. What makes his approach a bit unique is that he starts with the problem, builds a thesis, and then finds the solution to fund. So, looking forward to talking about all things deep tech in this episode. Welcome to the show, Michael.
Thank you for having me, Zal. I look forward to it.
Uh, Thank you so much for coming. And when we spoke earlier, and you told me about the thesis for the fund,
Mhm.
that's really what you feel sets it apart from other deep tech funds. So, can you just go a little bit deeper into that?
Sure. I think two things. Number one is after decades kind of working more as an operator, I saw that I could make more impact by enabling distinctive founders, particularly deep tech founders that often have a great technical solution but need both the capital as well as the corporate introductions to scale their solution in markets. And secondly, having lived here now for 15 years, I, you know, I'm very fond of Asia, but I also notice a lot of the biggest problems around here, energy, water, food, healthcare, are being underfunded, and particularly from a venture perspective. You don't see as much capital going into breakthrough solutions in these spaces. So what I did with the fund was to try to combine my experience as an operator and how I've scaled technology businesses myself, and at the same time take a impact focus addressing some of the biggest structural challenges of Asia.
Thank you. And I'm curious, in terms of your investment strategy, when you talk about it being thesis driven, uh, what does that mean actually in practice? I'm very curious.
Well, the biggest mistake that I've seen people investing in deep tech do is they fall in love with a technology that looks very groundbreaking, but they forget to check whether there's actually commercial market uh, ready for that solution. And typically, they will invest ahead of the curve. And so, as a fund, the perspective we're taking is that we want to scale solutions for which there is unmet demand here and now, and also we want to tackle the biggest problems. So I always say to my team, our biggest constraint is not capital, it's the time that we have. So we gotta make sure that we spend it with those companies that can have the biggest impact. And so when I share that we're a thesis-driven fund, what I mean by it is that we spend a meaningful amount of our time and fees in doing proprietary research around those big problem statements: energy, water, food, healthcare, resilient cities. And we basically research like what are the biggest problem statements there that are unsolved, for which there is innovation available today, and then we try to identify what's the most impactful innovation out there that we can find. And so our investments are guided by that. And so if to kind of make it very simple, if you're a founder knocking on our door and you don't fit with any of our theses, we're probably not going to spend time with you. But in contrast, for the theses that we think are very important, we will look globally for the very best startup and founders meeting that solution.
How deep does your research go before you decide to make an investment? So, can you just talk us through what, and you don't have to use any real names if you don't want, but like, what
No,
does that look like when you start with a problem statement, you develop a thesis around it, you then go and search for a company, which I'm sure there are quite a few trying to solve that problem, and then you have to come to this is the one. So, could you talk us through what that process looks like?
absolutely. Let me go through a recent story or journey. So last year, we built a thesis around the future of the grid in Asia. Um, we had identified that one of the biggest bottlenecks for having more renewable energy in Asia is the grid, and the fact that is relatively speaking compared to Europe and US. underfunded, underdeveloped. We identified that one of the biggest choke points was the connection of renewables to the grid on both sides. On the generation side, where solar and wind are intermittent in nature, and the grid can't handle that well. And on the distribution side, where people now are introducing EV charging or other type of loads which are unpredictable. I mean, in the past, people came home, switched on their lights, switched on their air conditioning, their TV, and so you had a very predictable pattern. That's not the case today. We then kind of zoomed in, okay, from an innovation point of view, what are the big control points? And we identified transformers, electricity transformers, as one area that constituted a real demand. We spoke to several utilities in Asia and other power players, and all told us that they had to wait on average 2 to 3 years before they got a transformer after ordering it. And they also complained that current transformers can't deal with that intermittency. So then we kind of zoomed in into transformers, and we looked at, we surprisingly, we only found like a dozen companies globally that innovated in that space. We did an outside-in review of all 10 or 12. We started talking to 3 or 4 we liked the most. We did due diligence on 2 and finally narrowed down to one in which we've invested. It was a UK company spun off from Oxford that we thought had the most practical solution to the problem, had a product ready, was kind of ready to scale, and was also, which was important for us, the founder was Australian and he had affinity with Asian markets and he wanted to enter Asian markets. And so we entered as their first Asian investor on their cap table and are now helping them land and expand in Asia. So that's kind of an example of a journey, Zal, that we go through. So from, figuring out what's a big unsolved problem, what's the innovation landscape globally, we look at everyone and then we kind of zoom in on one or two and make an investment.
So just to like look at that a little bit further, because it's a very interesting use case. Obviously, the main issue was you were looking at was energy, and
Yes.
you said, okay, what is the gap here? What is the problem here? So which is, I'm guessing, where this stands apart from most other investment firms, is you went out and spoke to quite a lot of people, and I guess this is where your deep experience in management consulting with McKinsey probably is very helpful, because I imagine there's a lot of research that goes into that. And so the notion of you going and speaking to people, because transformers is a very interesting industry. From what I understand, in the limited knowledge that I have, it's that almost every electricity provider in the world has their own transformer. It almost isn't like it's a custom built transformer for that particular system or that particular unit. And so somebody was saying in the US alone, there's like 15,000 different models of these step up or step down transformers.
It's a very fragment. It was actually insightful when we kind of got into it. It's like there's been so much innovation in wind, solar, and in batteries, but the transformers is, as you said, is a very fragmented industry. There's a lot of kind of medium-sized companies that make it. There are a few big companies that have some IP, but fundamentally the transformers in the grid are the same that were there 30, 40 years ago. In fact, in most cases, that's actually their actual age. And there's plenty of them, right? So, like for example, in the UK alone, the network will have like 150,000 transformers. So that gives you a sense of the size. Now, what surprised us is no one has innovated in that space, and so, I mean, except for a few. And I guess to just illustrate what's different about our approach, when we spoke to the founder of Ionate, which is the company we've invested in the end, he said that he'd never met an investor that was so educated on the space. We could not just tell him about the problem statements, we could tell him the size of the market, the players in Asia. And so he was just blown apart. He'd never met an investor like that kind of came to him with an educated view, as opposed to him having to typically educate the investors what transformers are and why they're important. So yeah, and yes, you could say, basically, kind of our approach, particularly the first part, to investing is closer to, consultant. It's very data-driven approach to take away biases and to avoid getting excited about things that, could be very cool, but aren't really solving a big problem.
I, my background is not consulting. My background is in sales, right, and being a founder. One of the most important lessons that you take away from sales and when you're trying to develop partnerships or anything is that you have to make the person across the table feel like they are the most important person in the world and that they are special. And I can imagine having an investor that sat across the table and has deep market knowledge on your specific industry. It's so rare because in the typical investment world, the and this is I coach and work with a lot of founders, and typically what you're trying to do is you're trying to convince the investor that this area is an area that's worth looking at and that they should invest in this and that this is the area that's going to be important. And to have somebody sit down and be like, well, I've already done however many hours of research in here and I know this area very well. I understand it. That must be so uplifting for a founder to hear and really make you feel like you're on the same side.
Yeah, no, I think, and that's often the feedback we hear is that people are surprised, like in that first conversation, how much we know about their space. And then I think that doesn't mean that we'll just invest like that. Like in this case, we spoke to many before we decided to invest. In some cases, we develop a thesis and we decide not to invest. But I think just again, and you said it yourself. I think in the previous conversation, the majority of these technical founders, they come from academia, they come from research. They have spent their entire life on that problem from a technical point of view. And they're very convinced just because of just the sheer amount of energy and mind share they've given to their invention. But they've rarely taken an outside-in approach and what's actually the market for this invention. And so to meet someone that kind of can complement that, and to be honest, we don't try to second guess what they should better on the technical side. We do technical due diligence to make sure it's the very best out there, but then afterwards we typically trust our founders on the technical development. But however, on the commercial development, I've just noticed again and again that the majority of the founders we're working with are just learning a lot as they go about their market. And as you said, they're naive about go to market. I mean, and that's okay, but that's where so from Antares, like we don't want to make mistakes on investing in startups that don't have a market. And when we invest, we come in with an educated approach so that after the investment, we can be as impactful as possible by making introductions to the right people, by helping them to tailor their pitch, which is probably what you do in your consulting work, and by making sure that they speak to the right people.
Yeah, you're absolutely right. I do so much work with founders, VCs as well, and a lot with accelerators and startup programs because of what you said. The realization is that most of the people that are doing the really impactful, really transformational development, they tend to come from an academic or a scientific background because they have spent their whole life
On
in
that,
that one space and trying to solve that problem. And what I've noticed typically is that because they come from this space where there is a very clear pass fail, yes, no, good, bad. It's a very clear, like if you can show your evidence, my answer is either right or it's wrong. And there's no middle ground. Whereas when it comes to getting an investor, when it comes to finding a partner, bringing employees on, or even making a sale, telling a client that, hey, I'm 10% more efficient doesn't usually move the needle enough for them to say, oh, take my money now. So it's helping them understand, how do you contextualize what it is that you're doing, how, especially for investors. I find that customers, it's different. If you've done this right, then you should know who your customers are and you can talk to them. But when you're going to an investor, and especially a traditional non-climate VC, which has the whole spectrum of investments to look at, you have to convince them why your area, your industry, your TAM should be the one that they're worried about. And I think that's where they really struggle. And oftentimes, these are some of the smartest people I've ever met. And so when they're trying to communicate to people, they're almost talking at like a level that is so much higher in terms of knowledge and awareness of the topic than the investor or than the customer. And that can cause sort of friction points in the sale process.
Yeah, no, and I empathize. I mean, I'm a PhD myself. I used to make lasers in the lab many years ago, uh, and so I empathize with those people. And it's again like, you got to just relate to them as people that have spent 10, 15 years in a specific domain, and so they typically can articulate very well why their invention is unique. But as you and I know, Zal, that's different from a commercial value proposition, right? I mean, like most customers don't really care whether the technology is A, B, C, or D. What they're looking at is unit cost or performance or reliability. Those are the things that a customer cares about. And even most VCs, I would say that, we're still in this kind of category of deep tech VCs is nascent in Asia. We're one of very few. And so the majority of the investors out here take a more general approach. And so what they know is revenue, etc. And these companies, at the time we invest, they have no revenue, right? So you've got to be able to make you got to be able to make an investor understand, like, why is this problem relevant commercially? And, why will you take market share? What does a customer take? And their narrative is often very technical first as opposed to customer first, right? That means that's what you would coach them all. And so that's, I think, where it's very hard for most of them to raise from what I call the generalist VCs. And I guess in our case, because we've spent time on understanding the problem statements, like we come in with a view, right? So even if they're not able to articulate their market, at least we have an educated view coming in. And so that's why we are comfortable making that bet, as long as we're convinced that the market is there through our research and that the product that they've built is ready to scale.
I think one of the biggest hurdles that I face when dealing with these clients of mine is mainly that what they have been looking and optimizing for their whole career, and the reason why they therefore feel that this solution is the perfect fit for their customers is rarely the reason that the customers are looking to buy. And
You're
one of the things that I find is that I often tell them, I said, look, everybody knows that stat about 8 out of 10 startups will fail within the first 2-3 years, and the ones that make it, 8 out of 10 will fail in the next 5 years. And so often what I stress to these founders is that what you're really selling is the fact that you're going to be there 5-10 years later. Because if you work for a big company, I mean, imagine working for a power company, right? Their goal is to minimize their risk as much as possible, because any issue means a blackout, means that they have problems on their hands. What you're selling is you're selling security, you're selling safety, you're selling reliability. It's not even the product you're selling you and the fact that you're going to be around, because when this guy is there in 3 years or 4 years, he can't turn around to his boss and say, oh, that company that we worked with, well, they've just gone out of business. So that doesn't make him look good. And it's that kind of shift in thinking that I try to work with, especially with founders. Just going back to what you said, actually, deep tech, and you mentioned it's pre-revenue, right? And sometimes I'm guessing you're investing pre-customers. That's a lot of risk. It's a huge amount of risk, especially when you think about how long it takes to get that money back, right? And deep tech is very hard to fund and slow to scale. So what makes you optimistic about the particular investment category that you've decided to dive into?
Yeah, so and let me also kind of give you some nuance on that. Um, so first of all, I think from a timing point of view, and this is actually very hard to get right, we look to invest at a time where the product is commercially mature, which typically means that they've already had some interactions with customers. We would rarely invest in a startup that is still in the lab, has never met a customer. And so part of our IC decision is which corporates have actually used this solution and what's their feedback. And then the second thing that we look at is, like, what's the market in which they play in and what's the trajectory to scale. And actually, if you think again about I mean, that's the good thing about the problems that we're focused on, energy or food, or infrastructure or cities. These are massive markets. The I mean, everyone speaks about the power demands of AI, but I can just add to, just growing income. The need, as people have more income in this part of the world, they kind of have air conditioning, they buy an EV. So the demand for energy is just massively skyrocketing. And so all of these startups that are, for example, in the renewable energy space, they're having a market which is in the billions and the billions of dollars. If you have the right solution, you can scale very quickly. Our transformer company, and I won't mention the names of the customers, they have customers asking them, can you build me 500 transformers in the next year? I mean, so their challenge right now is more on the delivery side. And so we look for those type of startups that have a really unique solution to a problem here and now. And so what needs to be untapped is what you also do with founders, Al, is that where we spend our time is, okay, these guys have figured out something. Some customers have said that this is ready. Now let's help them in pitching it to the right people with the right story, with the right business model, and then scaling actually can happen very quickly. I actually think some of these startups can scale faster than your general software startups. I mean, many people talk about software. The reality is in Asia, software is a small market. It's like you compare it like you compare software to energy. What companies spend on software versus what they spend on energy is just a fraction of it. And so I think people with but the reality is that VCs have kind of gotten used to software AIR, so they kind of know how to underwrite it. The problem with deep tech is how do you underwrite it, where the only thing you have is a product and a few customers that said, yeah, this looks good. So that's an art, right? And that's, I think, why there's few people that can actually do that. So that means that, yes, it's very hard for those founders to raise at that stage. But when we come in and, we've seen it, like we've been able to unlock, from, I will not say zero revenue, but less than $1 million revenue to 10 million revenue in 2 years. And then from there, it can scale on very, very quickly. So I would say, Zal, that if you kind of focus on the right spaces and you pick the right startups, this does not need a long gestation period, but it takes a very hands-on approach. And it takes an investment approach where you're able to underwrite the technical, you're able to confirm that technically the solution is de-risked, and you're able to underwrite the commercial risk by having a deep understanding of the market and what the market needs, and an understanding of how that startup's product's value proposition could be articulated to take real share in the short term. Sorry, that was a long answer, but that's so I say this actually is a very investable category. Many people believe long gestation period. I actually think this is a very investable category as long as you know what you're doing and you do the homework for it.
Well, I think what you're saying is very true in that, when it comes to traditional investments, people understand the software model. And also in Asia, they understand that there can be exits from that sort of space, where I think that in this whole market, especially for climate, this is what, I tell people, as I said, where have the big blockbuster exits been in climate? They're very few. The ones that I know where big companies have bought businesses tend to be in the ESG reporting space, and they're just adding extra layers to their own financial reporting. But what is exciting you? What is the sort of breakthrough technology? What excites you? What are you seeing out there? Because you're out there on the forefront of looking at what the next generation of technology is going to look like. So yeah, I've been curious to hear what you're excited about.
Yeah, so let's just talk about some of the thematics, right? Let's talk about energy, for example. You know, Asia is, with respect to the energy transition, where UK was or Europe was in the 80s, right? So 90% of the energy is still fossil fuel versus, some countries like Spain and Portugal, they run 100% renewable someday. So the energy transition is still in the early stages. At the same time, actually, what is driving the transition in Asia, from my perspective, is actually the demand, which is outstripping what you can build with coal. And so I think, just like we've seen in China, it's like why China has gone massively in renewables, because they needed it for their manufacturing industries, they needed it for their EV industry, and they needed it from their consumers. And so, and you add to that now AI. I think most of Asia has a structural energy deficit. And so that is just going to unlock a lot of investments. And so for the right startups that tap into those places, they can absolutely scale. My belief is that when a company reaches a massive scale, there should be exit opportunities. We've seen exits in the space. I mean, typically, actually, exits we've seen have been more on the early side, where our companies. We've had 6 exits in the past. They've all been acquired by strategic acquirers that acquired it because of the IP. So I don't think there's no exits. Now, whether you see the blockbusters, I think that's still a few years out. But I think the market is definitely there to facilitate the blockbusters. I can go to other thematics, right? Let's take food. Most of Asia has a food security challenge. Most Asian countries, including developed countries like Japan, Korea, Hong Kong, Singapore, Malaysia, all import food. Why is that? Well, in some cases it's lack of land, in some cases just a very low agricultural yield. India, Indonesia, Philippines still import food. It's a massive priority for the governments. Look at Indonesia, what the president announced there. And so I do think that the right innovations in that kind of help to increase agriculture yield and at the same time make it more sustainable can scale. Same for healthcare. Most of Asia is still behind in terms of healthcare infrastructures and clinicians. Healthcare spend is at the same time growing at more than double digits because, as consumers get more income, that's one area that they start to spend more on. So I do think in each of these markets, let's say, and that's kind of the thesis of our fund, there is a growth tailwind of at least double-digit percent if you look at each of these markets. And so therefore, our thesis is that if we find the right companies that address unsolved innovation gaps that are relevant here and now, they can lift on that tailwind. And that should result in blockbusters over time. I mean, that's kind of what we believe in. Now, obviously, the proof is in the pudding, but we've seen already in the companies that we've been involved for a couple of years that we're able to scale them to meaningful revenue.
Well, I mean, 6 exits for a fund that's less than 10 years old is pretty, that's a incredible feat. I'm, what do you see in terms of, because you're in deep tech, what do you see in founders? Like, what are you looking for in a founder that differentiates the successful from the unsuccessful ones when it comes to deep tech?
So I think it's a combination of founders that are on one hand very deep in their domain, because I do think that's their strength, compared to two guys that just kind of met each other at an incubator and say, let's start up a company. So in deep tech, you'll find founders with extreme depth in their domain, but I think at the same time are humble and open enough to realize what they don't know and be coached on that, or would be willing to accept that they might hire some people that complement them. So that to me, I think our best founders are, on one hand, very have a depth, whether that's technical or market or domain expertise, but are also very open to our help, to help of others. And I think the ones that become open, they can be and that kind of surround themselves with a group of investors or board advisors, they can become very resourceful.
How do you look for that? What is it that you're hoping to see in a meeting, in an interview? Because I'm guessing if you do so much work and research before you meet a founder or a company, the kind of due diligence that you must go through before you put a check in must also be very significant. So what is it that you're looking for in that founder, to make you feel that, okay, this guy's coachable, this guy looks like he wants to grow, I think he can build this business?
Yeah, I would say you generally need more than one meetings to figure it out. I mean, on average, I think we spend at least 6 months with companies before we decide to invest. But I would say in those meetings, what I'd be looking for is, and I would say it's more art than science, is whether you see that open-mindedness, whether they're willing to listen, as opposed to just speak their own story, whether they're willing to admit their weaknesses, whether they see the risks in their business, how they think about their boards and their investors, Do they think as something that they just need to report to, or do they see it as something that they will leverage? So that's the kind of things that we're looking for, Zal. It's more like a pattern rather than one single thing. It's like, is this someone who understands that to succeed, he'll need the help of many, and then that takes a constructive and collaborative approach to that. If any founder that is just looking for a check-in and then I'll send you a report, we're the wrong fit. We're very hands-on and we're very open about it. And where we feel that the founder is not on the same wavelength, we will not invest.
I want to switch now from talking about the fund to talking about you personally. And, I was looking at your career, very impressive, obviously getting to a very senior level at McKinsey, which, for a lot of people that I know, or when we were starting our careers, that would be a dream, right? To get to that level at McKinsey. And I know from my friends that work there, you have to work extremely hard to get to that level. And obviously during that time, you were making personal investments in companies and, sort of testing the water. But then you made the jump and you decided, okay, I don't want to do this as a part-time job anymore. I want to do this as my full-time gig. And, you go from McKinsey, which has this brand and opens doors and allows you to, everybody recognizes it, to starting your own fund, which comes with its own complications and challenges. What made you take that shift?
I think over the years, I mean, first of all, um, I've always kind of followed my intuitions on career moves. I think even at McKinsey, I think you have to, obviously there's the brand of the firm, but at the end of the day, your personal value proposition with clients, whether they want to see you again, has nothing to do with the brand McKinsey. It has to do whether you're adding value in that conversation. Um, and so, in a way, that part of it does train you as a founder, or whether it's a fund or a company, because you have to, you know, clients of McKinsey, they can hire anyone they want, and even within McKinsey, they typically can select whoever they want to work with. So unless you have something personal to add to the conversation, and that's a combination of content, insights, but also empathic ability, um, you're out. And so I guess what I've learned through McKinsey is, I mean, I'm very grateful for my journey with McKinsey. I never thought I would go in a firm. I mean, again, like they hired me when I was working in a lab. I had no idea even what the firm was about. I was headhunted in there when they wanted to set up a tech practice, and I would never have predicted to stay there almost 2 decades. But I'm grateful for what the firm did to me, which was to expose me to just so many different environments. Um, I was never kind of a single market guy, but I was like more of a technical. I mean, I was the technology expert within McKinsey, or one of them, and sort of so that got me to spend time across probably more than 30, 40 countries, working with clients from industries ranging from mining to agriculture to retail to telco to power, oil and gas. So I've literally been engaged with executives of any of these sectors, and so I think it makes you humble because in each conversation you kind of start from scratch. Um, so I think that's one thing that I just transposed earlier. And then why did I move? So I did move in two steps. So I left McKinsey to become CEO of a tech company, which I was offered in True Digital, which was a digital group set up by the CP Group in Thailand. So I was president and CEO of that unit for about 4 or 5 years. And I think in the first place, I wanted to prove myself that I could. At McKinsey, I was helping clients build ventures, set up corporate ventures arms, help them on the innovation. I wanted to convince myself that I could run a company. So I did that, and discovered that I could do it. But I felt if you're CEO of a company, that's just one single thing you do. And I felt that I could actually have far more impact back to what I was doing in McKinsey, where I would be working with a portfolio of things. And I think what I like about a fund is that you get to work with brilliant people who, again, by our selection, are open to help. And I'd rather help 20, 30 entrepreneurs succeed and change the world than just spend my own time on one thing to do that. just think it's more impactful, and I think it also just fits my personality more. I don't need to
I
be in the
think I think
spotlight.
we have something. I think we have something similar there because it was the when I left my company to get involved in climate and sustainability. I also said that look, I could either dedicate myself to one business and help grow that, and I might even pick the wrong one. Who knows, right? Who knows what the sort of leverage or the real impact will be. Um, and so I said, well, if I can coach and if I can help, 200, 300 companies raise more money, get more customers, hire better employees, then I can feel like I've had that impact because those companies will then grow and have that impact. And that's where I wanted to fit in that space. It is challenging in this part of the world. I don't know if you find that, the you mentioned Europe, and obviously there's a lot more sort of connection and enthusiasm for sustainability and climate in that, and they're really the ones that are leading the globe. How are you finding Asia? Like, are you seeing that there is an interest from government, from the public at large? Obviously, there are people that have specific problems to solve, but are you feeling that the general consensus in the continent is not that positive towards sustainability and climate?
Yeah, so it's a good question. I mean, I think I, I tend to frame it not so much as a climate conversation, but as kind of more structural challenges that Asia is facing, and I do think there is tailwind for each of them. Take the energy transition. Perhaps, I mean, it's particularly in the less developed markets in Asia, that transition is not so much driven by greenhouse gas emissions, but it's just driven by just the demand for energy. I spend a lot of time in India. That country is probably one of the most committed to putting in more renewables. But it is also clear that the agenda has to do with energy security. India does not have oil and gas. And so for them to have more renewables is a way for the country to just reduce its dependencies on energy imports. And then, indirectly, that does lead to a better planet. And so I don't think we need to judge like what's the motivation, etc. But I do, as a fund, we believe that the topics, which is the energy transition, decarbonization of industries, sustainable agriculture, sustainable transport, they are having real tailwind in these markets, and it is driven by a combination of government agendas, corporate demand, and homegrown innovation. So I am actually bullish that Asia can produce its own climate tech, deep tech firms. Are we behind Europe and US? Of course we are. The starting point in terms of, just sheer demand, government intervention, and just capital available is not the same. But I would kind of counter that with, if you look at the growth vectors here, are massively different. Energy as a whole, food consumption, healthcare are growing at double-digit rates. They're not growing like that in Europe. I would say most of the founders here, I'm sorry, but they eat a European founder for lunch. Uh, by their sheer drive, energy, and commitment, you know, and I actually we've invested in European startups, and we all invite them to come to these markets and see kind of the hustle which is happening here. And then thirdly, I do think the last thing that makes us optimistic as a fund is we believe a lot in working with corporates. We do see a lot of corporates in Asia committed to sustainability or committed to decarbonization of their operations across all sectors. We see a lot of energy groups that were traditionally in mining or in oil and gas invest massively in renewables. We see a lot of people in real estate work on sustainable green buildings. We see people in the agriculture space innovating and thinking about how they can make their operations more sustainable at the same time increase productivity. So I do believe that it is happening. It is real. It is perhaps driven less by policy, but more by sheer commercial problem statements. And so it will have its own evolution. I personally believe it actually will lead to fundamentally more healthy business models here because founders need to build for something that is not dependent on policy support, which I think that's the mistake. If you think about, what has happened in North America and Europe, Zal, and you spent time there as well, is unfortunately, we've had a hype because there was a moment, with IRS in the US and, the Green Deal in Europe, where, there seemed to be like massive carbon incentives, etc. And so it has led to a plethora of business models which, you take the incentives away, they make no sense anymore. I mean, take direct air capture, right? So things like that have, in my view, no fundamental economic sense, but they've been built because of an assumption on policy support. Now, administration changes, take the policy support away, where's the business? Versus here in Asia, that policy support is not there, so founders need to build more need to have unit economic viability without the policy support. So I think in the long term, I'm very bullish on what can come out of Asia.
I mean, part of the real pitch when I deal with founders and people that are creating technology is I'm like, just being sustainable or just being good for the planet is not good enough. I'm like, you have to build a better product. You have to go into a corporate and sell to them without even mentioning climate and sustainability. And you can tell them, oh, it's this, yeah, as a unintended consequence, we are helping the planet, but don't worry about that. My product is better. It does the job better. It does it at a lower cost. It's more efficient. Like, so you have to be able to talk about the value of the product that you are selling at a level where whether it is good or bad for the planet, it's almost irrelevant. You have to build a better product. And that's what's really going to shift and make people be better. That the unintended consequences, lower carbon, cleaner water, cleaner air, but it's a better product.
I mean, let's just look at fundamentals here, right? So European corporates are primarily listed, owned by big institutional funds that have ESG mandates. Whether those ESG mandates will survive or not, time will tell. Asian corporates are, by and large, family owned, promoter owned. And so what drives their decisions in the first place is, does it make money, right? And so so the start point is this got to make money. And that's what we're looking at with all of our startups. Now, do we believe that our startups have massive impact on the planet? Yes, they do. I mean, we have invested in wastewater treatment. We have a company called Hydroleap that treats water in a way that uses no chemicals and uses less energy. We have invested in several energy transition startups. We've got battery companies in our portfolio. We've got green hydrogen companies in our portfolio. We've got transformers. We've got biofuels. In all of those cases, again, it's got to make money. Otherwise, no one in Asia will buy you. Does that mean that the business owners here don't care about ESG? I don't think so. In fact, that next generation, which is, in many cases taking over from their father, has been Western educated, has been influenced, does care about sustainability, because their offtake markets are Europe and or US, right? So, take for example palm oil, right? So, which is a very big industry in Southeast Asia. They're selling to Europe. If they're, obviously they care about sustainability because it matters for their business. So I would not say that people don't care about sustainability here, but in the first place, it's got to make money, which I think in Europe was different because, you had these institutional funds that started to implement ESG mandates. And, if you didn't have a certain ESG policy as a corporate in Europe, you would just lose institutional investor support. So I think it has skewed the demand in Europe, and I think what we'll see is that unfortunately that doesn't make it so sustainable here in Asia. Well, if your unit economics are not viable based on a pure commercial value proposition, you don't have business. It's as simple as that.
And look, I've got one last question, and that's really around what does 5-10 years in the future, what does success look like for Antares? Is it purely a hey, we've had a good exits, we've returned money to our LPs, or is there some sort of impact measure that you want to put in as well to be like, okay, maybe we didn't make as much money as we could, but we actually had a huge impact in these 5 companies and what they're doing. So how do you measure success?
Good question. I mean, we are a fund, but we're not just a fund. the part of us that is a fund is that we have a duty to our LPs to return, a top tier return, and we believe we can do that without, I think the type of investments that we're making, we don't think compromise return. At the same time, I would say we're a platform for strategic systemic innovation in our markets that have impact, and I would say where that makes us different is, Zal, if in 5 to 10 years from now, if I deliver my return, we'll probably have a portfolio of 25 companies in this fund. If I deliver that return with a typical power law, 3 companies generated a return, that's not good for me. I want the majority of our companies in our portfolio to be successful. And so I think our approach, maybe we'll have less outliers, but I think our approach is to make sure that every company in our portfolio has a real chance to success. And we do that by putting a very high bar before we invest, making only high conviction investments, and then being very hands-on afterwards. And also to the corporates that we're working with, our value proposition to them is that we're this platform for innovation. So we bring them good products, good technologies. If out of the 25, only few of them have really distinctive edge, that's not good for them. So I would say, yes, we're a fund, and we compete with other funds. So if our return aren't there, there won't be a second fund. And we will also don't deliver on a promise to our investors. But at the same time, because we're a platform for strategic systemic innovation, solving big problems in Asia, I want the majority, not just a few, of my companies to be very, very successful. So that's different.